Welcome to Pressure Points. I'm Gene Munster from Deepwater Asset Management, and our Pressure Point topic tonight is Google and Microsoft earnings. We're going to do a combo platter because there are two companies. We get two pressure points. Tonight it's about cloud growth and about margins. And just as a point of reference here, as of this recording, shares of Google are down about 6% after hours, and Microsoft shares are up about 4% after hours in the earnings. So we'll jump right into it. As I mentioned, the key pressure point, the first one is related to cloud. Google's cloud business was expected to grow about 25% in the quarter. That's down from 28% in the June quarter. In fact, it missed that 25% growth and came in at 23%. If you're curious, the operating margin on that business is about 3%, and they have about 10% share of cloud. So that's Google Cloud in a nutshell, a slight disappointment, and that obviously is a pressure point because the cloud business represents one way that these companies can make a lot of money from AI. And so more AI that's done, these developers need to go to the cloud, and the big hyperscalers, Amazon, Azure, and Google are going to benefit from it. So that's Google Cloud. I'm going to jump down and put that into context to what happened with Azure. They have about 22% global market share of cloud. That business accelerated growth, went from 26% in June up to 29% in the September quarter. Margins had continued to rise, which is amazing. Their operating margins on that business are about 40%. And I mentioned where Google's were at about 3%. So as investors think about this, there's essentially a narrative that's coming together. And Microsoft was really clear on the call of this, is that they have these AI tools, this AI stack that's already in place, that they're essentially grabbing usage as companies and small businesses are building AI applications. They're gravitating to Azure because it's all tied neatly together to use those products. Google, on the flip side, hasn't rolled out their real competitor to OpenAI and some of the language models that Microsoft uses. That new product, that new platform from Google is coming out this quarter, and it's called Gemini. And then next year they're going to come out with a lot of other models that they're going to add to Google Cloud. And so the optimistic view of Google is that they're going to start to catch up once they start to compete more on a level playing field. And the optimistic view on Microsoft is every week matters, and they're continuing to get a lead here, Azure is. So the piece related to Microsoft's outlook for Azure was to expect consistent growth. At essentially the growth rate was 29%. It stepped down a couple percent in this December quarter to 26, 27. And they said that we should model that that's going to remain constant for the year. As far as the growth for Google, they don't give explicit guidance, but they were suggesting that their growth rate should be more stable at that 23%, which suggests that Google is probably going to be losing a little bit of share in cloud going forward. So that's the tale of pressure point number one, the cloud. We'll shift to pressure point number two, which is margins. And of course, you can't build a big AI hyperscale company like Google and Microsoft without investing a lot of money. Both of those companies are going to be doing it. And surprisingly, both had a similar message. In the case of Google, CFO Ruth Porat mentioned that they'll be increasing their CapEx investment or their investments just to build everything that we're talking about. But they see that that the revenue growth is going to exceed expense growth. And so that was a code for possibly margins coming down by a little bit, revenue growth exceeding expense growth. In the case of Amy Hood from Microsoft, when she commented on that topic, that same language, we're going to be investing a lot in this. This is really important for us. AI, build the infrastructure out, and we're going to maintain margins, which is a relief to investors that they can make these massive amounts of investments and maintain margins. So a little bit more soft on Ruth Porat from Google's language around that. Both of them are basically saying that they're going to continue to benefit from this continue to benefit or more or less maintain profitability. Last, this isn't a pressure point, but I just will add relative to Google and their other business, that being their search business, massive business, and they talked that grew about 10% That was from about a 7% growth in the previous quarter, their advertising business. And I think that's a sign that the overall consumer is healthy. So I do believe Google is a barometer. I was surprised to see shares of Meta trade down a little bit on that. Meta reports tomorrow, and I would expect them to have relatively upbeat commentary on advertising. So that was a bright star relative to Google. Microsoft really doesn't play into that. So those are our two pressure points for this earnings night on Google and Microsoft's behalf, and on behalf of Deepwater and Pressure Points. I'm Gene. Bye for now.